Hello and welcome. I'm Alex Grodnick, and this is Moving Up, a podcast about secrets to success, struggles along the way, and life in general. Today on the pod, Chen, the founder and CEO of NerdWallet. You've probably come across his site as you're researching a new credit card to buy or some other financial product. Anyway, Tim worked in equity research out of college and then for a hedge fund before setting out to build what's now NerdWallet. Tim and I have a really open and honest conversation about his journey, the mistakes along the way, and what he would do differently if he had the chance. I hope you enjoy it. Tim, welcome to the podcast.
Yeah, thanks for having me.
Thanks for being here. You're my third podcast of the day, the first one in a quiet room, so that's really nice. We'll get to have a better conversation than all the others.
Yeah.
Founder of NerdWallet. That's the today job. What was it like? Where'd you go to school? I guess let's start at college.
College. Okay, so I went to Stanford and I majored in economics, and that has very little to do with what I'm doing today. But yeah, it's a good start.
Did you grow up in San Francisco?
No, I grew up in Atlanta, Georgia.
And what kind of kid were you? Were like your parents entrepreneurial people, work for a big company? Where did you get this starting company stuff?
No, I was. Everyone in my family is a computer scientist, so I'm the first in my family to not do that. But I've always been entrepreneurial as a kid. I was always coming up with these harebrained schemes for how to run a business. I think at one point my cousin jokingly said, "You're either gonna end up in jail or very successful." So I don't know if that's a common thing with entrepreneurs, but yeah, I would buy and sell magic cards and things like that.
Sure. And then you get into Stanford. Was that your childhood dream?
Not really. I guess so, but I really just had been following my sister around my whole life. So
she went to Stanford?
She went there, so it seemed like the path of least resistance. But in hindsight, yeah, it was a great place.
Yeah. Okay, so you get there, and are you still tinkering around entrepreneurial things? You're thinking, I'm going to go work for a big company. What happened when you got there?
Yeah, so I got really into investing, or what I thought at the time was investing, which in hindsight was probably gambling, day trading.
Mm-hmm.
And so I thought I wanted to do something financially oriented. And I went to college in 2000, so just in time to basically lose all of my money during the crash.
Yeah, I lost all my bar mitzvah money in the
Yeah, and so I guess that was my first hard financial lesson, but it's striking to me, even today, I'm still making mistakes the same way. You screw something up and then you realize, oh, that's why people do things a certain way. So yeah, recently I invested in one of those peer-to-peer lending platforms, and I didn't realize that you can't deduct the losses from your taxes after $3,000 a year. So it ended up being a really bad investment that I'm still unwinding.
Why can't you? Why is that part of the Jobs Act or something?
Well, so no. Each security, you're basically buying a personal loan or a piece of it, right? So each one counts as its own security. So your maximum deduction each year is something like $3,000. So if you invest in one of these platforms and the loss rate is 10%, and you put in $100,000, you get taxed on everything you make, and then you can't deduct anything you lose after $3,000, which is atrocious. But you would never think about this unless you ran into the situation, right? And so, hence a lot of the inspiration behind NerdWallet as well. Or
unless I'm fortunate enough to know someone like you, and you say, Alex, don't get into this.
Right.
But yeah, NerdWallet. Okay, so you're starting to play around with investing in school, and do you do well? Do you lose it all? What happened?
Well, in college, no, I did horribly. I lost it all.
Yeah.
I didn't realize that there's this thing about fundamentally understanding what the company was and buying a fractional share of it and thinking on a 20, 30-year time horizon. I think that's the only way to do it. But yeah, I've gone the other way. Today, I still largely index the market. So I buy the S&P 500 ETFs. As someone who came from a prior profession where I was paid to invest people's money, I think that's saying something, right? I worked at a hedge fund. Now I index the market. So.
Right. Okay. So first job out of school is hedge fund or what?
So first job, I went to an investment bank, mm-hmm. and I was what's called an equity research analyst. So I would advise mutual funds and people like that on whether to buy or sell stocks.
You write those research reports.
Right. Exactly. Yeah. Yeah,
and
Wall
like,
Street Oasis.
And what industries were you covering?
So I was specialized in semiconductor capital equipment. So companies like Applied Materials, Lam Research, Tokyo Electron, nothing any consumer has ever heard of.
Right.
But they make all the equipment that goes into like Intel's factories or, like Toshiba's factories or Samsung.
Yeah, these non-sexy businesses are usually the ones that just make tons and tons of money.
Right.
Sexy ones that everyone's like glamorized about.
Yeah, totally.
Entertainment, tech. I mean, it's like difficult. So did you like that job? Did you like the industry? Like, what'd you take from that?
I did. If I summed up everything I learned into like one or two sentences, it would be some companies have sustainable competitive advantage, and some compete on price and basically just kill each other. And it kind of like, if you think about like all the tech giants today, there's reasons why they're not like competing on price anymore. They're basically there's like a word that people are really hesitant to use, but they're basically monopolies, and they pretend like they're not, right? And I think most businesses are either in that camp or they're just competing on price.
Right. And so you were there writing these research reports, and you started to see like these differences between companies that had like the real monopoly power and those that didn't.
Right.
And then did that translate into like an idea in your head of wanting to do something more, or like just, I can start investing in these monopolistic companies and make a lot of money for myself? Like,
yeah.
What were you thinking?
Well, I actually spent most of my time shorting companies that looked like they had sustainable advantages, but really didn't. There might be like temporal issues that people were incorrectly extrapolating, like a rosy future, but like, they were going to get hammered on their next pricing negotiation or something like that. That wasn't really like the core of my inspiration for doing this, but it always stuck with me as something that, had to really be careful of as I plotted out the future of the company, right? Because it's like, building a business is like rock climbing. So it's like, what are you rock climbing towards? Are you rock climbing towards something sustainable or something where you're just gonna be out of business in 5 years? So yeah, but the inspiration for starting the company was my sister asked me for help finding a credit card, and I said, let me Google that for you, and was just super irritated by the results I got, which all felt like infomercials rather than helpful.
Right.
And, yeah.
So there's a piece here in between the investment bank when you went to go do the hedge fund and stuff, right?
Yeah.
And then you're actually exercising your monopolistic, not shorting, buying.
Right.
That's what you're talking about, okay? And then your sister says, I want to get a credit card, and you Google that.
Yeah. I mean, so I Googled it and I was like, this is not helpful. And then so I spent the weekend building a spreadsheet for her of all the cards from the biggest banks. There's only like 6 huge banks here that account for most of the cards. And she found it really helpful, and so did some of my friends. And I was like, well, that's silly. Like, there should be a website because someone did the work. It should just be easy for everyone to access. And then, like, years later, I'd summarize by saying the core insight there is, if you are a consumer and you have choices, you don't want to spend the whole weekend building a spreadsheet, but you don't want to feel like a chump either. So, like, what's the way to shortcut that so you can, like, make a decision and move on with your life? And people want to trust a third party to do that, and that's how we think about the service we offer.
Right. Okay, so you're toiling away at this hedge fund, buying and selling stocks and stuff, and your sister asks you to do this, and so you're like, boom, light bulb, like, this is, like, I'm gonna go do this business right away, or like, I'm gonna stay working at this hedge fund and do a little on the side. Like, what was the transition?
Oh, well, I got fired.
You got fired?
It was 2008. It's kind of a rough year to be an investor.
Yep.
But yeah, so I had time on my hands, and I had always had that entrepreneurial itch, but it was just so hard to like step away from the career.
You're making money, and you're just like, this is what you do every day.
Exactly.
Right. That's difficult.
Yeah, so it was such a blessing in hindsight, right, to have the space and time to do that.
Well, looking back, it's so neat how that kind of works out. But in the middle of it, you're like, fuck, I got fired. I have no money. Like, what am I going to do?
Yeah.
But yeah, looking back, it's always nice and clean. Right?
Yeah, I mean, I think the psychological part is the hardest part of being an entrepreneur, right? Because you're used to like rules and structure and achievement ladders and like pleasing other people, and then all of a sudden you're thrown into a world with no structure where you have to create your own meeting, your own schedule, your own rules.
Yep.
And you have to have like this blind faith that it's going to create an outcome. It's pretty challenging.
While the entire world and society is telling you, stop, no, don't, it won't work, and like you're like, no, it will work, and like, no, it won't work. You should stop, and then
right.
Like it's like that separates the huge successes from the not ones, are like the people that are able to
right.
to just stick with it.
Yeah, it's tough when your mom's like, "What are you doing?"
Everyone's like, "What are you doing?"
Right? Yeah, everyone.
Especially like I went to business school and I joined a startup now, and like everyone, all my friends are like, working for Google and making lots of money, and it's like, it's funny, like they're envious of what I have, like, oh, you're an entrepreneur and you're like you're going to put a dent in the world and do something, and then I'm like, yeah, but they're making lots of money, and it's I don't know, it's tough to, you're right, it's tough to find like what's going to be right. I mean, looking back, it always seems to fit into a nice little line, but when you're going through it, it's difficult.
Yeah.
So what were the early days? What were the early days like when you got fired and started ideating on what's now NerdWallet?
Yeah, I mean the early days. So it started from a spreadsheet, right? So I basically turned the spreadsheet into a web app, which kind of looked like Kayak for credit cards.
Mm-hmm.
I think what I was really lacking at the time was a lot of understanding of like what consumers cared about. I was projecting my own bias onto the whole thing. As a financial analyst, I just wanted the whole spreadsheet, and I was like, leave me alone, let me figure this out. But I think for most consumers, they want, they're like, there's 1,000 options. They want to be asked like the 2 or 3 questions to help them narrow it down to 3 options, and then they want the power to choose based on what they need, right? So that's kind of like the core of what our product experience feels like today. And the other thing I realized was like, people don't really want to learn for the most part. I mean, there's definitely like super nerdy people who like want to dig in and understand the ins and outs of personal finance. I think for most people, it's like a just-in-time thing, right? It's like, okay, I just had a kid. What do I do?
Right. Tell me what the best is, and I just want to go do it. Like this is
right.
Exactly. I want to get back to living my life.
That's exactly right, and that's where I think I really went a few vectors in the wrong direction early on, like trying to educate people, trying to be paternalistic, not really understanding what their needs were. One early thing I remember, right, like, the first personal loan comparison tool we were building, we sorted everything by interest rates, and then people were like, well, what's the monthly payment? I don't care about the interest rate. And the paternalistic part of me was like, that's ridiculous. Like, why wouldn't you care about the interest rate? But it's important to understand and dig into the context of why they care about the monthly payment, right? And so, I don't know, it's like things like that have really humbled me a lot, but also made our product more accessible to more people.
Right. And I mean, what's implicit in this entire thing is consumer trust.
Right. People
trusting that you're telling them the right thing, you're not biased, and like, so how did you like go about building a brand and establishing that?
Yeah. Well, I think a lot about what I call the trust equation. I stole it from someone else. I don't remember who, maybe an exec coach or something, right? But whether you're talking about like a one-on-one, like meeting a stranger or meeting a brand, it's kind of the same equation, which is kind of like, what is their consistency plus their competency divided by their motive, right? And so the motive part is like what sticks out the most in our industry, because it's like, the reason I didn't trust the results I was seeing on Google was because they felt like infomercials. Like, the things they were recommending, there's no rationale behind them. I just assumed they had auctioned off all the spots, which is in reality what was generally happening. And so we thought it was really important to have like editorial separation between the people who are making the reviews and the ratings and the actual business side. Because in the absence of that, you may start off okay, but it becomes like a slippery slope over time. Like when you have 50 or 100 product managers or content producers, right? So we have that separation today, and that's made a big difference. The second big thing is like, we grew up not paying for our traffic. Like, we didn't buy a single visitor until maybe 6 or 7 years into our existence. And so we actually had the option of being consumer friendly. When you're paying $10 per visitor, you can't. You have to maximize monetization, otherwise your business goes upside down, right?
Yeah.
And so, that was like a big advantage of being bootstrapped. So we just focused really hard and had faith that this organic thing would play out in the long run. And so that's how we grew up.
I love that. Because that's what banking is today. I mean, Chase spends $500 to acquire a customer.
Yeah.
And so they have to nickel and dime and overdrafts and this and that. And it's like,
they don't have a choice.
Yeah, they don't have a choice. And they have to spend $60 just owning a customer for a year based on their footprint and branches. And it's like, well, that sucks. But what if I reimagined a bank from the very beginning and like it wouldn't have all those costs and things, like just build a delightful experience?
Yeah. Well, the challenge is like, you think about like, take 2 restaurants in New York City, right? Say there's like a neighborhood restaurant. It's kind of good value. You feel good after you eat there. It treats people well, so the reputation builds over time. Or there's another restaurant that's in Times Square where the rent is crazy, but you have to charge a lot. But then that's the only way you end up in Times Square. So both are sustainable and viable, like equilibriums for business, but they just yield, I think, different levels of consumer satisfaction.
Yes.
Yeah.
I agree. Okay, so I want to hear like more about like the early days of like what was like the very first product at NerdWallet, and like who were the people you hired and co-founders, and like how did it like start to take hold?
Yeah, I mean, I think it started with basically what was Kayak for credit cards, and then realized we really had to get this organic traffic going. Otherwise, we would never be able to. No one would know about us, right? Like one of my first incorrect intuitions is if you build it, they will come. Totally not true, right? Especially in such an acquisition-driven like industry like financial services. So started writing a lot of content to help people understand the different rewards cards out there. And then we got some early traction and then brought on co-founder and eventually our first employee. Most of our first hires were actually off Craigslist, which we got really lucky. Some of them worked out really well. And so, we just slowly built organically from there.
Right. And so how many years have you been doing this now?
It's been a little over 10 years at this point.
And you built something real. And so like, where do you think it starts to go from here? I mean, are you satisfied? It's like, let me just... And what's the business model today?
Yeah, so business model today, we're basically a matchmaker between consumers and banks, right? And we tend to be compensated like a bounty when we make a match. There's a long way to go. Like if I flip the problem on its head and I think about like where consumers still struggle today, like shopping has become a little bit easier because of the marketplaces we put up. What's still really hard is knowing what you don't know. So like I actually think most of the economic loss from consumers is like not knowing they should refi a student loan or not knowing that they should get a higher yield savings account or like there's a whole litany of things that they don't know. I think the power behind what like all these people at this conference are doing and where we're really going is like building member profiles and then nudging them when they should be doing something smart, right? So I think of that as like digital financial advisor. So I think we're going to make a lot of progress there in the next 5 or 10 years. Right. And then I think there's even like one step beyond that, it becomes like self-driving money, right? There's more and more automation as like those nudges become like more understood.
Right, just want to refinance, it will save you X amount per month. Yes.
Yeah, and you're pre-qualified and all
everything's already taken care of.
Right. Yeah.
That would be a pleasant day.
Yeah. My opinion is that the reason we're well positioned for this is we're not conflicted, right? Like it goes back to that trust equation, divided by motive. So if you're trying to sell me your own products, then how do I know that you're actually giving me good advice? And so that's where we really try to be a neutral third party. And that's where we don't want to like take deposits and do our own loans and things like that.
I mean, there is potential for conflict. I mean, like JP Morgan might pay you more than Citi will pay you for a bank. And so you might say, let's pump up that one, right? But you're saying that you don't do that?
Yeah, well, I mean, there's definitely some aspect of that, but that's where the editorial separation is really important. And that's where like you cannot do that if you're paying $10 per customer, right? But you can do that if you're getting your traffic organically, like you can be unbiased. So that's really something that, I don't know, we'll see how this industry plays out, but I think that's where we're
So next time you get advice from something on the internet, then go type it into Google and see like see if like where they are in their search, and if they're paying for a bunch of ads and stuff. Yeah. Then maybe there's something to think twice about.
Well, I think it's shifting over time too, right? Because what ends up happening over the long run, like the way Google prices or Google positions the ads, right? They're optimizing for revenue per search. So it's not just the bid, but it's actually like the bid times the click-through rate. So as your brand gets stronger, your click-through rate on Google Ads goes up, right, and then the price of the click goes down. And therefore, like another equilibrium that you can have is you just have a trusted brand, but you pay less for your advertising, right? So that's our thesis. Sure. That's why we've been able to start advertising.
That's really great. And I guess I'll have two more questions. The first one about advice. You're the people that listen to this podcast are early on in their careers. They're trying to like carve out their place in the world of like seeing what they should be doing, what they shouldn't be doing. Should I go work for a good company? Should I just go right off the bat and start a business? Like anything that you can like glean from your career that might be helpful.
Yeah, I'd say I made a few mistakes, right? Like one, when I started this company, I probably did it too early. I didn't have any sort of perception of what good looks like in a high functioning like consumer internet company, right? Just from the people, like, so I think like if I had gone and worked at a great consumer internet company for even 3 months or 6 months, not only would I have met a lot of people that I could have coached, I would have actually had a better mental models of what appropriate behavior and talent looks like. So that really slowed me down. I'd say one of the positive things that really helped us out was when you're small, and if you're doing like a media-oriented business like us, you can really go after a particular niche that no one has time to go after. That can actually be quite large, right? And you can serve that niche really well and build up an audience that way. That's exactly what we did. We started with cards. It's a small part of our business today, but yeah.
Well, that's what the internet is like built for. It's like super serving a niche audience.
Right. And that's a great foothold to get started, right? Then you can like rock climb your way into other things.
Yeah, that's great. Drive that wedge. And then I guess the last thing is, like I mentioned, the listeners, is there anything that they can do to you that would provide value to you? And I was talking about providing value. Like don't just send in resumes. Like find a way to like provide value. So anything that the listeners would do that would help you out?
Yeah, I mean, I guess like we're always thinking about how to like partner with other companies to create, this like to make money just like as easy as possible, right? And I think like the next 5 years, a lot of those things might be membership driven experiences that help people like take some cognitive burden out of what they're doing, whether it's like optimizing their 401k or whatever it is, right? Like I think there's a lot of really creative people out there that are going to solve this better than us, and I want to partner with them down the road.
Okay, cool. Well, Tim, thanks so much for coming on. This was great speaking with you.
Yeah, thanks for having me.
Okay.
Cool.
Thanks for listening today. If you like moving up, the best way you can support us is by telling your friends, helping us grow, and leave us a review. Thanks.